clients need to know from advisors that, yeah, you're going to see things on TV. You're going to read about things. I'm sure you got a guy that's going to call you and say, I got a sure thing. Definitely going to pay off big. But as an advisor, I think it's important to point out from the outset that you're in this for the long haul. It's the advisor's job to see from the top of the top of the perch, forest from the trees. All of those analogies are certainly in play here. But so having said that, I don't think advisors really have much of an obligation whatsoever to entertain these one-off questions about fad stocks or any kind of individual security when it's really their job to professionally manage your wealth.
I think there's the point, though. The point is, I think as an advisor, you need to get to the relationship level where you can say, knock it off.
Right.
Right? This does not fit into our investment thesis. This is a long-term play here. Do not get caught up in that. But I do think there is a really good concept that we had talked about a while back around this play money concept.
Yes.
Around so as an advisor, how can you kind of scratch that itch for these clients?
Yeah, these are not mutually exclusive things whatsoever. There's nothing that says you can't have a long-term financial plan with longer-term goals, but as a hobby, play in the market. And I think what an advisor can really do is help you identify what's a responsible amount of money to dedicate to this hobby. Not necessarily how to deploy that money, because that's, again, not necessarily the advisor's responsibility, but to give you a sense of kind of what your guardrails are for making these investments. And then if they go up, great. Now your hobby just became a little bit bigger. If not, maybe you got to make a decision whether to continue that hobby or save up to start another hobby. So I think that's a really good conversation as well. And you mentioned investment thesis. That's another great question that advisors can ask clients, because when clients come with something they read on Reddit or wherever, if an advisor asks, what's your thesis on this? A lot of clients aren't going to be able to answer that and say, well, thesis, like I read about it on Reddit, like everybody's doing it. So it's a great way to kind of remind your clients sort of the disciplined approach that you take to analyzing investments, looking at alternatives, looking at the macro level as opposed to what happened over the last week or what's going to happen next week. So all really good questions, but again, you can prevent a lot of these difficult conversations or awkward conversations if you do a good job outlining that at the outset of the relationship.